Hello and welcome to the RANsquawk Weekly Wrap-Up video. We're just going to take a moment to answer a couple of questions that sent in to the desk this week. So the first thing we're going to look at is this week's events. One of the major things that we did see was the ECB's second 3-year LTRO event. So this did see the allotment coming slightly above December's reading, just in excess of 500 billion euros. In terms of some of the breakdown of this, one of the main sponsors of the allotment was from German banks, who took up some 40% of that amount. We also saw quite a decent take-up from Italian and from Spanish banks as well. One other notable thing was slightly more interest from UK banks this time, with RBS and Barclays both tapping the ECB's LTRO operation. However, one thing that has been relatively prominent from today has been that this cash has seen the ECB's overnight rate have a record amount of cash parked in it. So this has led to some speculators to note that these banks that have used the ECB's LTRO are perhaps taking this money and then putting it back with the ECB rather than using it for lending to small businesses or to buy in peripheral sovereign debt. So just taking a look at the Greek situation, it has been a slightly quieter week for Greece. In terms of what we've seen, it seems almost certain that Greece will get their 130 billion euro bailout. In terms of when we're expecting this, it has been noted by the German finance minister that there is a teleconference on the 9th, that's Friday next week, in which the EU will ratify the bailout. It's also worth noting that the 9th is also the deadline, as imposed by the Greek finance minister, for the bondholders of Greek debt to submit for the debt exchange. So one of the things that we did see this week was S&P downgrade Greece to selective default. However, there wasn't a great deal of movement in the market. We also saw the ISDA say that with relation to the CACs and the Greek credit default swaps, that the bond swap would not be a default event. So there's definitely some more to look out for from next week, in particular if the ISDA does comment on the actual event of the bond swap. And the main thing that we'll be looking out for is the participation rate in the bond swap, and we'll look for the results of that on Friday. So we're just going to take a look at some of next week's key highlights to look out for. One of the main things will be the rate decisions from the BOE and the ECB. Focusing on the BOE to start with, all analysts are expecting the BOE to keep their rates on hold, and also for the current asset purchase facility to remain unchanged. We did see last month the Bank of England increase this by 50 billion sterling, and not another decision is expected to come until May at the earliest from the Bank of England's MPC. Looking over at the ECB, almost all analysts are expecting the ECB to keep rates unchanged at 1%. In terms of some of the other focus from Draghi's press conference, it's likely to be slightly less dramatic than usual, and one thing to watch out for will be from Draghi with the forecasts on European growth for 2012 and 2013. Many analysts are expecting this to be relatively downbeat, and that'll definitely be something to keep an eye on. Draghi may also comment on this week's LTRO operation at next week's press conference as well. Out of the US, we have a couple of events to look forward to. Tuesday sees the GOP primary vote for what's known as Super Tuesday, as the ramp up for the GOP nomination does start to kick off. Elsewhere on Friday sees non-farm payrolls out of the US. Current consensus is for a figure just shy of 200,000 for the headline figure. We have seen continuing improving conditions in the US labour market throughout this week, as the US initial jobless claims have dropped for the month. We're also seeing some pretty decent constituent numbers for employment in some of the major US economic releases over the past month as well. So the general feeling is that Friday's payroll number could continue the recent trend and show some decent improvement for the US labour market. So that's it from us for the week. We hope you've had a great week and enjoy your weekend, and we'll see you back on Monday morning.